buyers and investors, welcome back to the YouTube channel. Today I want us to talk about stock trading and then maybe touch on the difference between stock trading versus stock investing. I'm a stock trader. I'm an investor in general, but when it comes to stock, I'm a stock trader. So I'll be talking about stock trading based on my understanding of stock trading, and also why I'm saying that I'm a stock trader. Right. Okay. So now, when we speak of stock trading versus stock investing, maybe let's first start define what is stock investing. So when you want to invest in a stock, you would look at the company. What does the company do, the business that they are in? You may also look at the management, look at the market share of that business in the sector where they are operating. Let's say, for example, you want to buy a retailer. You would look at ShopRite, compare it with Pick n Pay, Spar, and maybe Woolworths, and then look at how ShopRite, the market share of ShopRite in a specific segment, maybe the middle income or the high income earners, how ShopRite is doing in that sector. Okay, ShopRite Group. And then also, when now you want to purchase that company, yes, you're still gonna be buying shares in the ShopRite Group, but now you'll be looking at the amount that you want to pay for the share at ShopRite Group. So basically, you want to pay at least a fair value of ShopRite Group. Then you will do some kind of analysis. Typically, people use value investing, where they try to find the value of the company share price. So now, once you have figured out that value of that of ShopRite Group, then you will see, you'll compare it with the share price on the market. Let's say, for example, ShopRite is trading at 185 Rand per share. And by your calculation, based on the business, based on the company financials, you will estimate that maybe ShopRite is supposed to be trading at 200 Rand per share. So if it's trading at 185, it's lower than 200. So you then conclude that ShopRite is trading at a discount. But there are many things that you would want to look at other than that. You may be interested in the profitability of the business, so that you can get a dividend from your investment. And then also, what is important when it comes to stock investing, you want to pay as low price as possible, and then also derive a maximum benefit from your investment. For example, there's something that they call cost something of a share price. If a company has a certain dividend yield, there's a certain price that people would prefer to pay for that particular share, so that they derive maximum benefit rather than overpaying to own a piece of a business. So that is share investing. And then your focal point on share investing could be the dividends that you'll be earning from that company. So you would want to it's not about creating an income stream, but it's about money coming back into your pocket from the business that you have invested on as an investor or as a shareholder. So if you pay less price for it and you get in large dividend, that's a good investment, right? So that's what entails company or share investing. You want to own a piece of that business and benefit from the success of that business, and then as a shareholder as well, you will also benefit from the risk or the failure of that business. So that is why people try to buy undervalued companies or to pay less for companies, so that if there are some things that are not going okay with the business, they can still have that margin of safety based on that investment. And then also, if you invest in a business, you would look at how the business operates. If ShopRite is still standing and you see maybe people buying there, that could be a good indicator to you as an investor that the business is operating as you're expecting. They are still generating sales, the revenue is increasing. Hopefully the profitability of the business is increasing as well, and the dividends are increasing. Right? So as long as you see that you are happy, it doesn't matter what the share price does. The share price can be stagnant, not go up, not go down, but you still get your dividends every 6 months. Hopefully the share price does not decline, right? So yeah, an ideal situation is either the share price remain the same or it increases. Whether it increases a lot or it increases a bit, it doesn't really matter as long as the company is still performing and giving you dividends. So you would be happy as a share investor. So now let's go to stock trading. Stock trading is just a completely different ball game. We know that when you buy shares, well, if you buy shares 100%, not trading shares on leverage, you get ownership of the shares. So you are buying a piece of that company. But for a stock trader, the intention is not to own a piece of the business. Remember, the shares are just a piece of paper that says that so and so owns a piece of this company. So when a stock trader buys shares, their thinking is that today I'm paying this much for this piece of paper. In future, I would like to sell this piece of paper for this much, right? It's not necessarily about the business, how the business perform, or anything like that. Who's in management? Does the business has a competitive advantage, and all those kinds of things. But I'm not saying that other traders or stock traders don't look into that, because there are many ways to invest or to trade stocks. I use technical analysis. So for me, it's just price and the chart. There are people who use fundamental analysis. There are people who combine technical and fundamental analysis. So for those stock traders who use fundamental analysis, either on its own or as a combination of technical analysis, they may look at the other factors. But from a technical analysis perspective, you just look at the price of that piece of paper. So the only thing that will make you money is if the share price increases. Here we're talking about buying. We're not talking about short selling companies where you can make money if the share price decline. We're just talking about buying or going long, as it is also called. So there you want the share price of the company to continue to go up. And then you can have a preset target. Let's use a Shoprite Group as an example. If you buy it 185, you can say you want to sell that piece of paper to somebody else who's interested in it at 200 rand. So if the share price reaches 200 rand, you then sell that piece of paper, pocketing 15 rand per share. Otherwise, if the share price continue to move up, you can still hold that piece of paper and then eventually sell it whenever you feel like you've made enough profit from that trade, or you feel like now the share price is no longer rising, right? So between now, the buying time and the selling time, the company is still operational. You can be receiving dividends, but you don't necessarily buy a certain company because you are chasing dividends. Dividends are just those extra benefits that you get for holding that piece of paper, but that is not the intention. You see, the difference between stock trading and stock investing is the intention of why you are buying that piece of paper. If you buy that piece of paper because you want to benefit from the business, that is investing. But if you are buying the piece of paper because you want to benefit from the change in share price, that is trading. That is the difference. Yes, it's easy to, these two terms don't really make much of a difference. The only thing that makes a difference is an intention of an individual, because even if you're an investor, maybe at some point Shoprite will no longer make sense to you, then you will sell your ownership. If you sell it at a higher price than the price that you paid, you will receive profit. But between then, you would have received a lot of dividends. Some people, they say they buy and forget, so they may never sell their shares. but they'll be deriving income in a form of dividends from the businesses that they've invested in. So it's the intention that differs. What do you want to get from a company, right? So now, yeah, share trading, you're just looking at the price. You want to benefit if the change in share price in the positive direction. If it goes up, then you're going to make a profit. If the share price goes down, then it moves against your intention. Then the best thing that you can do for yourself is to sell that particular piece of paper and see if you can find another piece of paper that you can buy so that you can sell at a higher price, right? So now with investing, we spoke about the value of the share. What is the value? In stock trading, we only look at the price. We're not necessarily saying that you want to buy at a lower price, because if the share price drops, there are so many things that could be happening in the company itself, or the market perception. By market, I mean the market participants, the people who are buying and selling. It could be institutional investors, like the companies that buy and sell shares, large companies, or it could be retail investors, me and you, like individuals, not companies that are buying the share. So now the share price movement is based on the market's perception on a particular company. Then the value is based, back in the day, if you read in the financial statement of a company, you will see things such as plant, property, and equipment. Those are some of the things that investors look at. What property the company own or the business own, equipment, if do they have a piece of land. And then there are some things, tangible assets, intangible assets. These days we live in a more tech savvy world. Some things are not necessarily are not necessarily tangible or physical. There are some things, like this channel, it's Trend Trader, it's a brand, so it's an intangible asset. It's an asset to the owners of this channel. Unlike if you have, say, Shoprite Group, they've got trucks, they've got buildings, they have a lot of things that they use to run the business, and then also they do have intellectual capital. So things like intellectual capital, it's intangible assets. So for some people, it's not easy to put value into that kind of asset. I mean, when Tesla started, the business was not profitable, but the share price was increasing. Yes, they had factories where they were doing research or trying to build the prototypes or producing some of the cars, but for a very long period, Tesla, the share price increased even though they were not delivering the cars on time. People would order those cars because, well, it's a nice car. If you look at it, they will order that car, but Tesla would fail to deliver the car on time. Yet the share price, it still increased, right? So I believe that was based on people's perception, although there wasn't a lot of physical product that Tesla was offering. But in terms of intellectual property, it offered a lot of value, and people were chasing that value, as opposed to companies, physical companies. In South Africa, we'll make an example with Shoprite. In the US, there are stores such as Target or Walmart that have physical stores. So people, they know the value of that business based on the physical businesses that a company owns, right? So now, when it comes to stock trading, the perception is just on price. And then there are some limitations to either stock trading or stock investing. In stock trading, one of the limitations is that at some point you're going to sell your shares. Let's say you're selling your shares for profits, right? If you're trading shares, stock trading, you may not necessarily wait for a dividend. Yes, dividends are important. They do add a lot into your portfolio. I will never say don't do dividend investing. If you own a stock, at least it should pay a dividend. I mean, you're not going to stop buying shares because they don't pay dividends. Remember, for stock trading, your intention is buying the stock with an intention of selling it at a higher price. You don't buy a stock because it pays dividends and all those kinds of things. So one of the limitations, if I can put it like that, of stock trading is that it's possible and you will buy companies that do not pay dividends, because if a company can go up 50%, 100% in terms of share price growth, but still the company may not pay dividend. They will speak about earnings, because earnings are derived from the income that the business generated or revenue. So once they have the revenue, they've subtracted a lot of the expenses that the business does. There are a lot of expenses until they reach the point that, okay, these are the earnings per share. Then you still get a positive figure, but the business is not profitable. So the earnings are increasing, but there is no profit in that business. Also, the share prices is increasing. Because the share price is increasing, you will have made a profit. But for an investor, especially an investor that is interested in dividend paying companies, they can miss great performance in terms of share price, because the company does not meet some of the requirements that they are looking for. If dividend is one of the requirements, then the company does not pay dividend, then they may not invest in that particular company. But when it comes to stock trading, if you are using technical analysis and you're using trend following, you see a series of higher highs and higher lows. That tells you that, okay, this share price, not the company, this share price is on an uptrend. Then you buy that particular company. You may not need to dig in what the business does. Do they pay dividends? What are their earnings? Are they creating a new product that will compete with other stocks or with other businesses in that particular sector? What are their long-term and short-term goals as a business? The management, what do they own, and all those kinds of things. So because we are not looking at that information, we are going to miss out a lot on that information. If that information is irrelevant to you, especially if you are a technical trader, then it doesn't matter, right? So yeah, that is just the difference between stock trading and stock investing in brief. Like I said, stock trading, you are concerned about the share price of the security. That's all that matters to you. Is the share price going up? If it goes up, you buy. If the share price is going down, you sell. Simple. You don't have to overcomplicate it. Then with investing, you look at the business itself. What does the company do? The products they have, the competitive advantage, all those kinds of things. And then the benefit that you'll get as an investor is the dividends. And hopefully when you sell your shares at a later stage, you will sell them for profit. With stock trading, you are just interested in selling your shares at a profit. And for that to happen, you need to buy at a low price and sell at a higher price. By low price, I'm not talking about cheap, looking for something that trades for 1 cent or below 1 rand or below 5 rand. No, it doesn't matter where you buy it. You can buy that thing at 1,000 rand. If you sell it at 1,100, you have 100 rand profit. So that thing, some people may consider it to be expensive, but what makes the difference is the change in share price. You want to sell that thing at a higher share price that you bought it. It's that simple. It's not complicated. Let us not complicate it. Then on the next video, we'll touch on some other things concerning stock trading. But for the purpose of this video, let's just leave here on the difference between stock investing and stock trading. So I will see you on the next video. We'll just be making a series of these videos. So if you want to learn more about stock trading, not necessarily stock investing, stock trading, just hit the subscribe button and click on that bell notification. And if you find value in this video, please make sure that you like it and you share it with other people that might find value in it as well. Sharp.